Now that we know what a balance sheet is, what the formatting looks like, and what the formula is, let's reinforce our learning by actually doing one for practice. So this handout is also available on Canvas, but you shouldn't need this since we now have a video for this. So we're going to use the balance sheet example from the previous slide, or in this case the previous video, but I'll go back to that slide and show it to you. And we're going to prepare a balance sheet for a company called Range Company Cleaners at the end of November. And the only information we have is that they have cash of $50,000, equipment of $7,000, accounts payable of $14,000, and the name of the owner is B Range, so therefore the name of the capital account is B Range Capital, but we don't know what the capital amount is. So now I'm going to back up a slide and show you the last balance sheet we did, and you can use that as a format and as a guide to create your very first balance sheet. So using this example of a balance sheet, use this information here to create the new balance sheet for this company. Now the important thing is you need to make sure that your assets equals liabilities plus owner's equity. Remember, that's the whole basis for the balance sheet. Assets have to equal liabilities plus owner's equity. And you need to get the three-line heading correct too. That is important. But don't try to memorize little formatting things like, should this dollar sign be here? Should there be a dollar sign here and here? Should there be a single underline here? Should there be a double underline here? Those things are nice to have correct, but those are not critical. If your balance sheet does not balance, however, that is critical. So go ahead and pause this video now, and on a piece of scratch paper, create the balance sheet using this information. Remember, studies have shown that it's really critical for learning that you actually do things by hand. So please do this by hand instead of on a computer. So did you pause the video and actually do it? If so, let's go look at the solution. So here we're going to show the solution for your balance sheet. So what should the top line be of the three-line heading? It should be the name of the company, which in this case is Range Company Cleaners. Okay. In the three-line heading, what's the second line? Well, that's the name of the report that you're creating. In this case, it's the balance sheet. And then what's the third line? Well, the third line is date related. In this case, it's November 30, 2000, whatever. Now, one thing that's critical to understand about a balance sheet is it's a snapshot in time. So the date for a balance sheet is always a single day, not a time period. So some of these other financial statements we're going to work on, like the income statement, will be for a certain time period, like for a quarter or for a year. But the balance sheet always has to be a single day because it's showing you that the balances of your accounts on that day. So on the left, we should have our assets listed. So our assets are cash, $50,000, and equipment of $7,000. So then we total up the assets, and we get $57,000. So that means when we add up our liabilities plus our equity, it also has to be $57,000. So on the right side, we're going to list our liabilities and owner's equity, and then we'll list the liabilities first. The only liability that this company has is accounts payable, $14,000. And then we have to list our equity. And what's the name of the equity account? B Range, Capital. Now remember, I did not give you this capital amount. However, can't we figure this out? If assets are $57,000 and liabilities and owner's equity also has to be $57,000, can't we just go ahead and calculate the amount of capital to make the balance sheet balance? Yes, we can. So assets minus liabilities equals owner's equity. So $57,000 minus $14,000 equals what? In other words, $14,000 plus what equals $57,000. It's $43,000. So then we list total liabilities and owner's equity, and we add up the $14,000 plus the $43,000, and we get $57,000. And there you go. Our very first balance sheet does balance. Now in the real world, you would just go and look in your records to find the capital account. You would not have to calculate it. However, the reason that the authors make you calculate it is because it's a really good learning exercise, and make sure that you understand how the accounting equation works.